Hey, when it comes to credit quality, though, as you flagged, certainly better than expected. But one of the issues here is that net interest margins are probably going to stay depressed because we have so much liquidity, perhaps even excess liquidity still within the banking system. Just your thoughts on that. And what are we going to see from other earnings rolling out later on this week?
No, I think that's very well said. I think you're going to continue to see very strong headline numbers with credit continuing to come in better than expected. I mean, the myriad relief efforts from the U.S. government, the Fed, and the banks themselves through the nearly $1 trillion in forbearance they provided is served as an effective bridge for their borrowers. So you're going to continue to see banks release reserves. But the question is going to be that second piece you talked about. Can they actually put that excess cash to work? JP Morgan gave sort of a sanguine outlook in terms of loan growth, sort of saying it might not manifest this year. They were still pretty hopeful. We're continuing to hear bankers say that pipelines look good, and they're hoping that consumer spending is going to look stronger. The consumer's in great shape. The issue is everybody still has too much cash. We've been tracking what we're calling excess savings among the U.S. consumer for some time, and we tagged that number at $2.6 trillion, and it's continued to build. And some of that's stimulus and expanded unemployment benefits, but you've also just simply seen people hoard cash. And we're hearing the same thing from commercial customers as well. So everybody's going to be really focused on, will we see loan growth resume in the second half of the year? We think we're going to see a little bit of it, but it might be we might have to wait till 2022 for it to be a bigger event.
When it comes to the cash that those banks are holding, will we see increased buybacks? Will we see increased dividends? Will we see a return to pre-pandemic levels? Or given we still have strains of the virus out there, the Delta variant, for instance, do you think that banks will perhaps be a little bit more prudent and hold on to some of that cash for a rainy day potentially?
I think we're going to see increased capital returns in terms of sort of their fear of where the pandemic is and do they need to sit on more cash to prepare for future loan losses. We're not simply hearing it, to be honest. I mean, the reserve levels continue to come down. We're still above where they were in sort of the early days of the pandemic, and we're expecting that those numbers are going to continue to fall down. We pegged about $33 billion in reserve releases for the U.S. banking industry this year. We're probably about halfway there right now. We think they'll continue through the next few quarters. And pretty much everybody we talk to just says that they're not seeing losses manifest. And we saw from JP Morgan today, delinquency numbers actually continue to decline. So until you really see any change there, until you see actually economies go back to sort of shut down here in the U.S., I don't think you're going to see a change in attitude in terms of capital return.